Good morning, everyone. First of all, Julie, John, thank you for inviting us here. It's was really amazing so far, and the people are just incredible. So we feel very privileged to be here. And secondly, I think it's the most beautiful place I ever pitched about angels. Sorry, and I'm excited. It was my other fund. So now that I made my, we say in Hebrew, fadicha, we can move on. I'm Lee. This is Roy. We founded AnD a year and 3 months ago, right, like 2 weeks before the world kind of closed because of the corona. AnD Ventures is its early stage fund. We're investing in Israeli technologies. And we have kind of a unique model. But before we'll get into that, I want to tell you a little bit about myself. So before founding AnD, as I said, I was a partner in a fund named iAngels, a women-led fund based in Israel, invested in more than 100 companies, managed $300 million. Before that, I worked for BlackRock when they penetrate Israel for 2 years. And before that, I was in politics. I was the chief of staff for the Israeli ambassador in Washington, D.C. For 4 years during the Obama-Netanyahu administration. Very, very interesting period. And before that, when you come visit Israel, I'll bring my tour guide skills and show you around. So that's kind of what brought me into AnD. My partner, Marie, was the founder of leader of Google for Startups. So he founded basically the programs of how Google work with startups around the world. Started in Israel. They took him to the Silicon Valley, and he built 17 different programs around the world, from Tel Aviv to Tokyo to Warsaw to Sao Paulo to Silicon Valley, Mexico, just Lagos, just name it. He was there, yeah, creating the ecosystem and leading the way. A very, very tiny company named Google work with startups and entrepreneurs. Before that, he was at LivePerson, and before that at Microsoft, and before that, he doesn't really like to mention it, but he was a lawyer. So, Daniel, at your door. Exactly. So just a little bit about Israel. So a lot of you know about Israel, have been to Israel, work with Israelis. Some of you even invested in Israelis. We live in a very, very unique time in Israel. Like, Israel was always known as the startup nation, right? There is the book about Israel. There is amazing entrepreneurs building companies out of Israel, great universities. We have a mandatory army that really produce a great pipeline of very technological leaders that are stepping out of the army. They probably know technology that we will see only in 15 or 20 years from now, and creating the next leadership of technology in the world. So Israel knows as a startup nation. And then, that's maybe relevant to call Israel the startup nation, I don't know, 20 years ago. And then it really evaluated and grow, and people start calling Israel the exit nation. Why? Because there are so many good entrepreneurs. They build companies. The corporates around the world, like Google or Facebook or AT&T or Amazon or Snapchat or Citibank or whatever, start coming to Israel. Say, okay, there's something interesting going on in this little country of 8 million residents. Let's set up an office here and see what we can see, what will be the next technology. And then they start acquiring companies, a company after a company after a company after a company. And Israel started to be known as the exit nation. Every third person in the street had a little exit, selling it to one of the biggest corporates in the world. And today, what we really like to call Israel is the growth nation. Israel has changed. Yes, you have great entrepreneurs. You have amazing technology. And we'll talk a little bit about what we see and where we invested. But more and more entrepreneurs that build companies, sold company, created technology that changed the world, coming back to the drafting table and building their second company and their third company. And this time they say, okay, yes, there are 350 international corporates based in Israel, either looking for the next technology, or they have an R&D center, or venture funds. There are more than 150 international venture fund based in Israel, looking kind of for the next growth companies to invest in. But now we want to build a company that will last, that will be big, that will have a headquarters in Israel, but 40 different around the world. And then we see the last year. until 2020, until the corona, Israel was very successful. Raised $7 billion every year in fundraising, investing in startup, exiting around 3x more than that. But this year was just incredible. So Ray and myself founded AnD a year and 2 months ago. We sat together on the table. We were super excited. We had an anchor investor from Australia. And we said, okay, let's go. 2 weeks after Corona, Israel is shutting down. The world is shutting down. The investor is calling us, okay, guys, it was very, very interesting. Whatever you have invested in gold, and I'm out. So we sat like on there, we said, okay, what are we going to do right now? And we looked around us and we saw our friends with their companies, and we saw our entrepreneurs that we already start meeting. And said, like, there is no way we're not going to fund AnD. And a year and 2 months after, we closed our first closing. So we raised $30 million out of 75 and invested in 2 companies, have amazing LPs, amazing companies, and we Zoom it through the process. Thank you. And we felt there is a really thirst, a need for something that it's a little bit different from the traditional, let's say, VC investors. So just to kind of, before giving Roy the opportunity to speak, and you won't say Google at the beginning, you say AnD, right? Okay. I just say that it was, as I said, it was an incredible year. Yeah, we also had an interesting 2 months ago. I don't know if you heard, but Israel suffered a lot from a war, and we sat in the bomb shelters with our kids, and we were defended by the Israeli technology. We had Iron Dome in the sky, kind of taking all the missiles down. And Ayala and myself, with our 6 kids, sitting in the shelter and say, okay, this is why we do what we do. We want to find stuff that will enable us to change industry, to change the future, and to be there. And really kind of taking the Corona year, it was crazy all around tech. Tech is eating the world. Software is everywhere. Even places that we didn't think software would be a part of, like digital health, that was very, very slow, has emerged during the Corona. If you look at Israel, okay, from the startup nation to the exit nation to the growth nation, in 2020, we introduced 25 new unicorns to the world. So unicorn is a company that's worth more than $1 billion. And Israel had 22 of that until today in the history of Israel. And during the Corona, it doubled the companies that grow. So companies like eToro, which is the biggest social trading network in the world. Basically, people can come and follow your investment and be a trader, like a professional trader. By the way, a company I personally invested myself 4 years ago, grew up to be a $10.4 billion in valuation. Hippe, which is a good friend of Roy, disrupting insurance and sending you sensors to your home and providing you another layer of defense before something will happen. Your home, your car is now SPACing in $5.1 billion. And just more and more technologies that really help our world. So this is why we're here. This is why we establish AnD, to really bring people closer to what we do and building kind of the landscape of what we call the next generation VC that we will elaborate more right now. So we'll continue.
Sure thing. So a few house kind of ground rules. We'll take it to the German mechanic approach. Questions, okay, as we go. Questions, disrupt, innovate. So we're in the venture capital world, and I think on the one hand, venture capital is obviously the fuel of innovation around the world, but at the same time, venture capital hasn't really innovated itself in decades. So we're looking at the same models, we're looking at kind of the same approaches, and there's something broken in that process of how venture capital works. And I think unless you get to the mega funds, which I don't claim that they are very efficient, but the normal human-led funds around the world always suffer from the limitation of the structure of venture capital. Okay, what's the management fee? What's the equity? What's the carry? How do we manage it? And how are we are able to really make sure we return the investment to our investors and at the same time keep the economics of the fund effective? So when we started AnD, we said why, and this is pretty much an Israeli standard of, okay, if the world is doing this, why should we do the same? Um, and uh, and yes, I'm not going to say that we at Google, but when I worked at Google, there was a huge advantage of being in Israel for a year before we moved to Silicon Valley and started taking things global, because there's something about that Israeli sandbox. I always make fun of kind of, when you're going around the world and you talk about the entrepreneurship culture, Israelis would go with a T-shirt that I failed 8 times, or I crashed my startups, I wasted my investment, because failure and risk is basically what we talk about every day, because it's what builds us and what makes us stronger for the next iteration, the next kind of project we'll take. So being now based in Israel, especially during a pandemic, and we had more lucks than brains in Israel, that we got out of it faster than everybody else, but enables really to look at and bring people around you that you can think about a new model, a new way of doing things. And I think this is kind of the baseline of what we do at AnD Ventures. In AnD Ventures, we focus on early stage. And that's where I think, and we think, it's the biggest broken piece in the venture capital world. And I think Corona just sped up that process, because what happened during COVID is we've had investors look at the later stage startups. Who can we SPAC quickly? Who can we exit quickly? Who can we support with tens of millions of dollars to get hundreds of millions of dollars very fast? That's not venture capital. That's basically, there's almost no risk there. And it's, let's capitalize on what we have. We did see a 35% decrease in investment in early stage startups. Why? Because that's the maximum risk. And when you look at how the venture capital world looks, even when you see early stage investors, they take the maximum risk with the maximum potential of return, but there's a long period of time where we expect these early stage founders to prove themselves. And that's why we have the spray and pray strategy of most funds. Of let's invest in a lot, maybe there'll be one or two that will pay for the portfolio. I can speak about this for hours, but you see why this is not really company building, and this is not really helping entrepreneurs. This is basically the vanity of the venture capital world. I'm going to sit here with my money, spread it, and wait and see what happens next. What we're trying is to break that mold, and we're looking at four main, by the way, 7 minutes and no questions. Thank you. What was the score of the game? 0-0. 0-0? That's the best score you guys got like in ages. Woo! Yes.
So obviously you've seen an enormous amount of change within that early stage, both obviously historically, but also in the last 4 months. What's your valuation benchmark when you get into that? Are you looking at the capital markets, or are you looking at a corporate exit, or are you longer term on that? And which part of the accounts are you focusing on? Is it cash flow rather than profit, accounting profit?
So first, when you're talking about really early stage, everything you just mentioned doesn't matter. So the idea is, how do we bring serial entrepreneurs or super smart people with a PowerPoint, and how do we evaluate the PowerPoint? How many words in the PowerPoint? How many images? The quality of the images? It's a challenging process. So what we're doing is basically under the fund, we've built an entire studio with the purpose of supporting the first 6 months of entrepreneurs, getting them the first design partner, potentially the first paying customer, getting them the R&D support, the product support, whatever they need to feel like a company so they can validate very, very quickly, which is, by the way, a two-sided route, because the more senior the entrepreneur, the more they want that validation as well. They want to know that they're not going to spend the next 10 years building a company or a product that doesn't make sense. So this is where you got a great give and take, where we all enjoy that route. But what you have at the end of the route is basically validated products, or the things that we're going to say, okay, we're not going to continue, or the founder is not going to continue. So this is how you're creating a buffer for the fund, for the investors, and for the community around us, because you're never going to limit yourself to the size of your own fund. You want the investor ecosystem around you, and we spend a lot of time bringing our LPs into deals, giving them the direct access to the pipeline. You just created a much better way to do due diligence. Second, you're really helping early stage entrepreneurs at the time that's most critical for them. And I think the third thing is, you just de-risk that process of early stage investment, and it's again, there's always a theory, and then you need to validate it. But a lot of really good founders are not going to accept valuation on day one. They're going to say, okay, this is the safe, this is the option, help me. And when we get to the end of the route, when we're going to get to evaluation, you have your discount because you helped me along the way. And I want you as an investor because you helped me along the way. So what we've done in that broken process is basically created an alignment between the entrepreneurs and the investors, something that you didn't have before in early stage investments. Help, what's in it for them? How do you make sure that their interests are preserved? Yes, please. So far, we've invested in 2 companies. So you can do the average between the two, but that's going to be a little bit challenging mathematically. So we've invested 1.2 in the first portfolio company. We've created a vehicle for another $1 million for our LPs. And in the second company we invested 900,000. They're a little bit earlier, but they're the classic example of a company that came through our studio. So this is a company we would not have invested in if we haven't worked with that team for 6 months, see how quickly they execute, how reactive they are to feedback, and how they're building their company. But I think I'll use your question and kind of talk about the 2 examples that we invested in to kind of show the, again, going from theory to practice. So the first company we invested in is called Infinigrow. Classic, 2 kids from the Army, the most elite units, a lot of data experience, heavy machine learning algorithm in both cyber and intelligence. And they decided they want to solve the basically blindness of organizations on what's happening with their marketing budget. How do you plan? How do you allocate? How do you do attribution? When I first heard about this, I said, well, there has to be 50 solutions in the market that do exactly the same thing. Apparently not. And when we started with our due diligence process, we introduced them to 4 CMOs. 2 of them became customers. Good signal, usually, that you should invest. And we looked at their board, which is comprised of the new generation of founders in Israel, basically all the companies that Lee mentioned that have just exited in the last 2 to 3 years, which means that you have this new wave of the successful bringing the younger folks with them and investing and building, kind of reinvigorating this ecosystem. So we invested in Infinigrow, and we immediately went into the process of how are we getting them ready for the U.S. market as soon as possible. Israel, U.S. market. I don't know if you guys know the Israeli market. It's huge. We like to talk about markets. It's a huge market in Israel. No, nothing to sell. So we need to go to the U.S. as soon as possible. But when I lived in Palo Alto, when we lived in, I said everything you say can be used against you. When we moved to Palo Alto, there's a huge group of Israeli founders who built companies, scaled them, sold them. Now, one of them said they got to the U.S. on time. Everybody felt like they got there really late because there's still that physical barrier to cross. So we're trying to cross that physical barrier as fast as we can with our companies. And I think there's 3 parts, and we're deploying them now or applying these methods now with Infinigrow. Is 1, Israel is very good at let's build a disruptive technology, let's experiment quickly, let's deploy quickly. Amazing. But then you get to the standards of what's a Silicon Valley standard for a product, for user experience, for the user journey. How do I create that stickiness with the customer, the feelings I want to get between the user and my product? These are the things that usually the Israeli founders will say, unless they've done it twice or 3 times, they're going to say, let's deal with that later. We're the later, where we're getting them ready. You also want to look at their tech stack and make sure that when they go from 100 users to 1,000 users to 10,000 users, you've got the back end ready, you've got the platform ready for that. And obviously, they've just got investment, they're building their team. How do you help them build a team and bring the team together as a team to build? So this is what we're doing, 4 to 6 months. In the process, we've already doubled the yearly sales of the company from a few $100,000 to almost $1 million soon. And it just clicks and works. And once they're Silicon Valley ready, then we're going to boost them through our basically partnerships and what we've created around the world to get them in front of as many US-based companies as we can. So going back to the fund, we have 4 pillars of how we do business. 1, we run a studio. We create our own deal flow, our own pipeline, and our own support for the early stage entrepreneurs in Israel. 2, we do our validation with corporates and matter experts. We never count on ourselves only to make a decision on investment. 3rd, we company build our investments. So we're there with them to basically complement everything they don't have at a certain stage that they're in, to put them in a process, in the right structure and process. And four, we create the international bridges of how, in a very seamless, effortless approach, we can get them in the international markets. We're currently in Japan with Hitachi, Mizuho, and some other big corporates coming on board. So we've created a landing pad for our companies in Japan. We have the same in New York. We're now opening the same in Miami and San Francisco. Basically, control the whole route. Why not build a service? Yes, I know it sounds difficult, a lot of work, but you know, we're early stage, they're early stage. That's why we're there.
Interesting. So I was part of a group that did this in Santa Monica, where we had an accelerator, and we actually e-companies.
No, the name of the group?
Oh, the name of the company was e-companies. Yeah, and it was one of the founders of Boingo and Business.com. I mean, the record of paying the most money for a URL, Business.com, which was ridiculous. That was in before the first crash. But we had a number of challenges with that. And so we couldn't, the scalability of having enough people to support that whole journey was one of the biggest challenges. And we ended up having quite a big staff. So I'm just wondering, what's your staff today, and what are your projections in terms of the team that's helping these people go through this journey?
Super cool. So thank you very much for the question, because I think it was another 7 minutes without a question. But it's actually a good one, because one of the things that I've learned when I was building programs at Google is Google's a huge company, but when we're looking for experts, products experts, UX experts, people who have the regional expertise of building business, you can't really count on the Google stack of personnel. So you need to build an ecosystem. So the first thing we've started doing at AnD is build an ecosystem around us of serial entrepreneurs who already build companies in certain fields or have expertise in certain fields. And we bring them in as partners, meaning if they help a portfolio company, we share the economics. If they take a board seat, they enjoy the economics. They have access through us to build their own portfolio. So basically, when you look at the company building element, we drive the process. We have a team of 9 people right now around us, internal, that is driving the process. But we're always going to be limited by the talent, the skills, and the expertise. And that's why it's important for us to create that crazy ecosystem around us of serial entrepreneurs and professionals, and to bring them close. You know, everybody likes to help. That's the Israeli ecosystem. But you need to create the what's in it for them formula. And sharing economics is the way we found to really bring them in and create the interest for them. Because now what they're getting, like our investors, is qualified deal flow, and they can choose where they can come in, where they can help the most, and it's kind of a yin and yang that works together.
So do you bring in, if they have an amazing idea, which a lot of people aren't then equipped to be the CEO and leader of the company, do you bring in the CEO and the top person to help drive it?
So one, you have to be, when you're a venture capitalist, unfortunately, you have to be ready for that scenario. We didn't have that scenario yet, so it's all good. But we did make 2 senior personnel changes in companies that we work with, because we had to. Because part of our due diligence process and part of the process of running with them is bringing the HR folks to do the assessment, who has the right skills and they're working right together. Yeah?
Just want to say something actually about your question. What are the parameters when we're investing? So of course we're doing the market analysis, competition, technology, but the team. When investing in early stage, I don't want to invest in a team that I will think that in 10 years, 5 years, you know what, not 10 years, 3 years, I will need to replace them. The due diligence on the team is crucial. We want to meet with them. It's a wedding. We want to sit with them hours. We want to strategize with them. We want to see how they adapt to criticism, to challenges, and also during the negotiation with the lawyers, you learn a lot on the entrepreneurs, and also working with them for months before investing. So I think the team in early stage is, and I'm not surprising anyone, it's kind of the most important thing. So we would like to invest in an entrepreneur that we will see as leaders leading their companies, but we are ready in the future. If we will need to replace them, we will be ready to do so if needed, but this is like not the idea really.
One of our most successful CEOs came from Activision, and he was a lawyer, and it wasn't his idea. He took one of our ideas, and now he's a partner with Mark Andreessen, with Horowitz, and he was the mobile gaming. But
Activision Blizzard.
Yeah. He was a lawyer, that wasn't, he was just an amazing leader.
Amazing. Yeah.
So, I mean, that's
Yeah.
that combo.
So we're in Europe, and Israelis are famous for getting to the U.S. quickly, but the Europeans might think, well, hang on, what about us? We're 500 million people. We can help. We can help companies with this patchwork quilt of going local. There's a certain skills. Any entrepreneur that's built a pan-European company knows how to go local and scale. There are certain reasons to believe that the way people treat digital identity in Europe is potentially ahead of America. There's a difference, right? So why not Europe?
So there's no why not Europe. It's what Europe has to do. I always say that the founders, the innovation, they're the users of any platform. And I think every ecosystem is measured on how far it's willing to go to attract the talent in. So I think, when you're looking at market expertise, there are centers of expertise within Europe that are just crying out, bring the innovation in, because there's certain expertise that has been built here that will be very difficult to access elsewhere. For instance, when you look at Germany for robotics, for the whole next revolution in industrial tech, it's just crying, bring us the startups, bring us the innovation, we'll make the connection. If you're looking at the fintech scene of what London can provide, it's vast, it's amazing. Look at all the new e-banks coming out of England, which is nuts if you thought about the regulation in England 10 years ago, and will they actually enable it? So I think there are a lot of centers, and even here in Greece, we've uncovered a secret group that is building basically an innovation sandbox for the European Union, and for our Israeli startups, it's classic, because within a 2-hour flight, you can come, deploy, implement, prove that it works, and if the connections and the bridge is going to be really good, then you can connect them back into the European Union and show that these technologies can change. But when I was looking into ecosystem building, I think the challenge is on the flip side. Is what are you doing to attract these founders? And it's not enough to say that if I'm a fintech startup in Israel, London is great. I'm not used to going to London, building the bridge. What is the programming that's going to take me there? As an Israeli startup, if I deploy in Silicon Valley, look at all the next generation insurance companies coming out of Israel, Lemonade, Hippe, scale is automatic. So I think there's two sides of the equation, creating the education and creating the programming, so these companies can actually see that as a relevant market to go to.
And I also think we need to educate ourselves about Europe, which we're doing right here. We talked about the talent that there is in Greece of engineering, that Israel lack of 120,000 engineers. So how do we bring great engineers to our startups? Usually Israelis, they will go to Ukraine or to India. Maybe Greece is an option. Maybe other places in Europe is an option. So I think it's, we build AnD for the long term. So not one fund, not second fund, a lot of funds, and also a very strong base of a studio. And Europe is on the map. We just need to see what would be relevant for our companies or for our studio in Europe.
If I can slightly reframe this question.
As you understand, in the partnership, I'm the one that needs help. You started that yesterday on the boat. So basically, look, we are early stage entrepreneurs, and we see ourselves as entrepreneurs. I share with you kind of the model of what we're building, but we have a long route to go of validating that model, perfecting that model. At the same time, we're running with kind of these octopus arms of how we're creating better support for Israeli portfolio companies, and how do we create those bridges with places around the world that didn't have that ability of support that I think is missing, especially when we talk about kind of European sites and how do we connect them better with Israeli founders. Look at what we've done in Japan. So the last 10 years has seen a significant increase in Japanese investments in Israel. Almost every big Japanese corporate has a team in Israel dedicated to do deal flow investments. But apparently that wasn't enough, not culturally and not from the business perspective. We've opened shop in the heart of Tokyo. So what we've told the Japanese corporates is, we're going to make sure the innovation gets here. We're going to build that bridge where Israeli founders are not going to say, hey, it's fun to get Japanese money as an investment, but there's actually going to be a POC process, an integration process of how you go to market together. And that was a radical change, which I saw it's a kind of a natural next step of how you do it. So thinking together of where you see opportunities that we can leverage together and building those bridges, because it's a two-sided street, by the way, getting the Japanese maturity of how they see business, how they're building their manufacturing roadmap. They have amazing corporates there that really see the future of what the future is going to be like. That's an amazing access point for Israeli startups. So each market and each opportunity these guys see, I'm always happy to explore and see, can we duplicate the process, do it with the relevant changes. Because if we open shop in London tomorrow, London has a very thriving strong ecosystem of startups around them. It's not like, they've waited for the Israeli startups to come and save them. But I think that bridge of knowledge sharing can be very interesting.
Excellent. Can we have one last question, please? And then
When it's a question, some comments, and I think an answer to that. As you were going through your 4 stages, I was asking myself the question: how can we help? And each of those stages. The first one, great companies are built on great ideas, but all the failures are as well. I don't see idea is really an interesting thing. And most successful companies have pivoted, which says their original idea was not good. The approach I'm pushing is starting with the end user need, what I call the picture on the wall, understanding that and building it. So, that is one of the ways we can help in that first stage. The second stage was validation with corporates. Absolutely core business of Viva. What we're doing with Entrepreneur Country, what we're doing, is enlarging your ecosystem of available. Build company where you're saying, bring in the experts. When I look at a movie with the serial entrepreneurs like Spielberg and Tarantino, when those 2 magic words come up, the end, that's when it becomes interesting, because there's 1,000 people after that,
Yes.
all of whom were experts, all of whom were self-employed. Brad Pitt's left eyebrow curler and so on. And they are the ecosystem that made that movie successful. Yeah. And that again is Entrepreneur Country. And then the fourth thing is creating the international business. This isn't the only one, but one company that I work with is Matchmaker Ventures that does corporate account management as a service. And there are many, I hope there's going to be many more in your David and Goliath thing. So, each of us should think how, to answer your question for ourselves, how can we help you? And I think we can at each of those 4 stages.
Thank you. I think that, and we're going to, during the course of the day, we're going to be talking about how we want to follow up with various partners and so forth. I think there's many ways. Roy, is there any last word that you would like to give, or Lee, in terms of, before we move on, any fantastic innovation in the venture capital space? Really appreciate you sharing your progress so far and your momentum. Any other last comments?
We're here.
Excellent.
Love to chat, love to think together, and let's innovate together. Thank you.
Thank you for coming.